Well, hello everybody, welcome back to another edition of the Forex Strategy Lab video. My name is Alexander Nikitin. I'm a professional trader and a developer of pattern search software. If you guys are new, what I do in these videos, I am sharing with you some experience that I got during my market research, and I'm sharing with you some footage from my market research as well. So and so on and so forth. I'm just trying to reveal you the secrets that I have discovered recently, or maybe some time ago, sharing with you my experience. Let's put it this way. And if you guys are following me for a while, I want to say thank you for your thumbs ups. Thank you that you share this video on social media. Continue this work. Click that like button, comment, and this stuff is really appreciated. Okay, in today's video I will talk about my alternative entries that I have discovered recently. Actually it is 80.9 level, the power of 80.9 level, let me put it this way. And also I will talk about the alternative stop loss placement, 113 versus X stop loss placement. This only can be referenced to advanced pattern trading. So this is actually the alternative way of advanced pattern trading. It's not that you can apply that with harmonic trading. Harmonic trading is a bit different thing. It relies on price action a bit more conservative way rather than advanced patterns. And well, let us not waste our time. Let's start doing our calculations, especially because I am to cover that very many things in this video, and maybe it will take me for an hour or so. Well, who is Alexander Nikitin? First, let me introduce myself. I am a trader and a programmer as well. This is a good combination that gives me an enormous advantage. Whatever idea I have according to the market, what if the market does this, what if the market does that, I just code it and my software shows me if I was true, if my supposition was true, or if my theory was true or not. This is very simple. Instead of doing the work of checking all the ideas manually, it is very simple to do that with monster pattern search especially. So right now in front of your eyes you can see the patterns drawn by monster pattern search. I can delete them and then will be redrawn automatically. Here is my monster pattern search version 3.7. If you guys are interested in my software, you are welcome to visit my website www.ps-software.net. It is Black Friday sale, 30%, good deal. 3 days left, so hurry up to get this. Well, I think everybody needs to do the market research regardless of how much he knows about the market. If you guys know the concept of trading mindset that was put by Trade Empowered team, it has 4 stages. It says that first the trader faces the unconscious incompetence, then he goes to conscious incompetence, then he travels to conscious competence, and then he finishes at unconscious competence. So what this means, the unconscious incompetence is usually the thing that all newbies possess. This is Mr. Know-All. He doesn't even know that he doesn't know something. He don't realize that he needs education. He is Mr. Know-All. When I was a newbie, I was Mr. Know-All. I never wanted to learn something. I never wanted somebody to tell me something, and so on. So it took me about a year to travel into the second stage of conscious incompetence. The conscious incompetence is the stage when you confess that you don't know something. You say, well, I don't know. I don't know that. So if you are familiar to Socrates, it told that you need to learn very, very, very much to find out that you know nothing. This is very powerful saying by Socrates. Learn a lot to find out that you know very little. This is the conscious incompetence. You confess it. You don't know it. So what you need to do when you realize that, you are looking for some ways to educate yourself. You are trying to save some money to buy a trading course, maybe buy some software, maybe buy some books, maybe just spend 10 hours a day doing something. In my case, I did it this way. I've been working very hard for half a year. Let me show it to you. Why should I why should I explain it in my words when I can show it to you? Maybe I have some video. This is the video. This is here. Capture number 12. Maybe. So, oh, here it is. This was screen recorded video. Okay, this guy is me. And I've been working in some construction business, doing some plastering works, and actually, what I want to say, I've been working for about 6 months, and I was paid $5 per square meter. I don't know what is the square feet. If you are American, you are to convert the sums. In Russian, we use square meters to calculate that stuff. So I've been paid $5 per square meter, and I've been working this way. Look at this. Look at this. Look at this. Yes. Working using my 2 hands, plastering that stuff. You now can hear the sound of the mixture that is running on the background, and so on and so forth. I've been working that hard for 6 months to generate enough money for living, not for living to live right now, but for living to live a year ahead. Do you understand what I mean? So I was saving money to have my free time, and after I saved enough, after I worked that and I saved enough, half a year I've been working this way, I had my year of education. So I've been using 10 hours a day doing backtesting manually, using 10 hours a day and spending that money that I generated previously. So this was my investment. I invested some money, and then I was spending the whole year doing that research work, finding this, finding that, and finally I came to some concepts. I understood how the market is moving, and of course this was a good basement for me to do that. Nowadays it is a bit more simple. You can spend I don't know, you can spend 10 times less to purchase the software that will do the market analysis for you, and you only need to calculate the results. You don't need to do that all hard work, working 6 months plastering using your both hands. Oh, there were funny days. It was time missing them. Okay, let's continue. So, who is Alexander Nikitin right now? Alexander Nikitin is known as one of the top analysts according to TradingView rating. You can find me as one of top authors here. Just click on that TradingView rating page, go to all time. Alexander Nikitin enters top 10 traders. 1, 2, 3, 4, 5, 6, 7, 8. Number 8, top analyst. They say that I am an authority in the field of advanced pattern and harmonic pattern trading. I am an expert. Well, but I'm not thinking of myself this way. The first day that I start thinking of myself being an expert, being an authority in this field, I will stop doing my research. I will turn into Mr. Know-All, and I will be captured in the same trap that I had in the very beginning. I don't want to be Mr. Know-All. I want to have open mind. That's why I constantly improve my skills. Well, they say I am an authority. Let it be. Okay, what I am talking about today, the level I discovered with my market research. Let me go to TradingView. It has a bit better drawing things on the chart, so we can. What is this? So where are the shadows? Do you see any shadows? I can't see any shadows. What happened to TradingView? Strange things happen. Okay, TradingView has that powerful drawing thing. That's why I like the platform. You can draw it, whatever. Suppose we have a bad advanced formation. So we will only talk about bats. What are the levels for entry? The level for entry is this. 886. 886. You see, this is the level for entry. And it is said that in conventional rules, it is said that stop loss should be placed at 113. So let me enable 113 as well. 113. So the larger is the XA leg, the larger will be your 113 level, and so on and so forth. Let's enable some targets as well. Here's the target level. What are my calculations? The 382 and 618 conventional targets. What I discovered in my market research that in many cases price reverses somewhere here. You see? It never touches the 886. This way, guys, you never enter. Look what happened recently at this Euro-Pound trade. Stretch the fibs. You will see that 886 never hit. And there are plenty of examples of that posted recently by me. You can see that. I don't know what is the best example for that. Pound New Zealand, maybe. The touch and reverse 80.9. Simple here. Touch and reverse. Godly. Then you know the conventional entry for a godly advanced formation is 127 AB extension. AB extension, so it differs depending on the AB leg. It may be as deep as X if the B point is deep. So here we had the deep thing. The 127 AB extension would go closer to X, but it reversed at 80.9. It is Bitcoin, 15 minutes, bits map. Some more examples maybe, and the butterfly pattern is not a good example for that. Euro GBP, the trade found real time, so I pause that. I don't know what will happen next, and then price does this, it does the reversal. Okay, so just some footage from my recent trading, some results from that. Here it is. I just noticed that in many cases price never hits the 886, and if we talk about godlies and we talk about ciphers, the level of 786 is typically penetrated, and only one or two situations out of 500 trades you have when it does touch and reverse, and it only reverses at 786. So I suggested to have the 80.9 level as well, and it ended up having a unified pattern. So Be it exactly when you have the B point of this, I entered 80.9. Be it the bad, yes, when you have the B point of this, I entered 80.9 as well. So it ended this way in my market research, and I will explain it to you in a second what it means. Disable the old level. Okay, after that I did another observation. Let's do the calculations. So this is the risk to reward. If we enter at the level of 80.9, yes, even if we enter at 86, and we put the stop loss at 113, our initial target goes to 382. You see, the risk to reward is negative. It is the typical situation for Cypher and for Gartley when the reversal somewhere close to 786, 80.9 slightly exceeds that reversal. So it is typical situation for Cyphers mostly, but for Gartley it also has that in many cases when you have it this way. Okay, what happens if price doesn't reverse exactly at your level but goes a bit deeper somewhere here and reverses here? You have to restretch your fib. This is known as target adjustment. Yes, your entry stays the same but your target goes lower. This case you end up 0.77. Okay, what is the worst case scenario? Suppose price goes here, penetrates X, goes deeper and deeper and deeper towards your 113, and one pip above there it goes and hits the target. What is your risk to reward then? It turns into, what is that? Oh, sorry, 0.36. You see that? 0.36. I have my notes by my side. I will give you the exact numbers. Oh, it will take some time to record this video, so guys, don't be mad at me. Maybe you will need to use the double speed or something. Okay, so my notes say this. My notes say this, that with cipher patterns, when you have the entry at 786 or somewhere here, your risk to reward ranges from being this, what is this, 0.36 to this, to large. This is your largest reward, yes, 0.70 something, 0.96. Okay, here's the range of your reward. This is the maximum you can get, 0.96 as compared to stop loss, and here's the minimum. Here's the minimum you can get. Yes, 0.30 something. My notes. Where are my notes? I did the recording of that. So many notes here. Okay, nice. Let's continue. What if you place your stop loss exactly at X? What if you place your stop loss exactly at X? Let me draw this one-to-one thing. Here it is. Let me make it smaller. So your best risk to reward is 1.57, 1.6 roughly 1.6, yes. and your worst risk to reward, so the price may go deeper, deeper, deeper towards the X. For example, we didn't trigger the stop loss here and reversed higher. Your worst risk to reward is, let me have it, 0.97. Can't be. It is your best risk to reward. Worst risk to reward should be 1-to-1. I just did that. Special calculations for that. So I am to make it a bit more precise. Let's do the numbers. Coordinates 42.1899. 42.1899 is the entry. Of course, 1899. The profit level is 45.733. 45.733, and the stop loss is 40.043. 40.043. So here's the stop loss. Now you can see 0.99. It is actually 1-to-1. 1-to-1. Okay, so now you can compare. The worst case scenario is 1-to-1, and this worst case scenario from 35 to towards 1. Let's do the calculations. We need to calculate the Excel spreadsheet. I will give you the formula. We will do the simulation. What is simulation? Means we will trade 10,000 trades right now. To do that, we need some random thing. We don't know if the next trade will end up being a loser or a winner, yes? So we need to use some random generator, but we know that we have a higher probability of this trade being a winner rather than a loser. So what is the probability? What is the probability of a trade being a winner in advanced pattern trading, placing stop at 113? It is 60%. So let me do it this way. The cell equals random between 1 and 100. The 1 is inclusive, that's why not 0 but 1. So it will give me a random number, and if I stretch that towards 10,000, if you are interested in 10,000 trades, maybe we need some less trade, it will give me random numbers from 1 to 100. Oh, stop it. Done. Very interesting simulation. Okay, let us suppose the trades are random, yes? If the number is more than 60, it is a winner. If the number is less than 60, it is a loser. Oh, no, vice versa. If the number is more than 40, it is a winner. We should have more winners. If it is more than 40, it is a winner. Imagine this way. These are trades. 100, yes? So 40 from from 1 to 40, they are losers. And here, what is left from 40 to 100, they are winners. Agree? Yes. Why not? And because the number is random, it is randomly either before than 40 or past 40. Understand this? We have a higher probability of hitting something more than 40 because the sample size is larger than that, 60 versus 40. We have a higher probability of this random number being more than 40. But it is random. And you should understand that trading is absolutely the same. The outcome of current given trade is absolutely random. It either will be more than 40 or less than 40. It will be this or that. Okay, let's type the results. Let us type the result. So this equals if this number is less or equals 40, yes, then it is a loser, type -1. And if it is not, else type +1. Done, done. And if I double click on this, you see everything is recalculated. When I change some formula within the cell, you see these cells are also recalculated. So 10,000 trades, another 10,000 trades, and another, and another, and another. Okay, how can we calculate the amount of trades here? Let's apply the formula. This equals count within this range. So whatever is filled here will be counted. So totally we have 10,394. This is the count, total trades. Let's calculate the number of winners. So it equals, again, we need to type sub formula. If, count if, it equals count if. Calculate only those that meet the criteria. Within this range, what should be the criteria? More or equals to 1. Yes, it should be 1, somewhere here. This is the criteria. Okay, calculate the number of winners. We have 6,000 of winners. And now we can calculate the accuracy. The accuracy equals winners divided total. It is 60%. There is the button that can recalculate them all. It is called F9. Yes, if I press F9, you can see the accuracy: 61, 60, 59, 59, 59, 60, 60, 60, 59, 60. So you see it works. It works pretty good. So I just did about how many? 5,000 trades? No, 50,000 of trades. Every time I replay, I have another 10,000. Yes, every time 10,000 more, 100,000 trades. This is the simulation, large numbers, thinking in large numbers. What we know about our risk to reward? It's not always 1-to-1, yes? If we risk 1, sometimes we lose more. Sometimes we lose more than win. And let's go back to this. You see that? Worst case scenario. What is the worst case scenario with 113? It is 0.35 of loser. Okay, let's have it this way. And what is the best case scenario? 0.35. And the best case scenario says 1-to-1. We only win 1 in roughly 1 in best case scenario. But we don't know how can this happen. Yes, we either will have worst case scenario or best case scenario or something in the middle. And price, I will open your eyes, guys. Price will randomly reverse somewhere within this area. Randomly, you never will predict that. Either it will reverse here or here or there. So it will randomly reverse. Okay, let's type it in our simulation Excel spreadsheet. Instead of winner, it should give us a random number. Rand between. You know that rand between doesn't deal with float numbers, floating commas, so we need to do it this way. 35, yes, and 100, and then we will just divide it by 100. So this means 35 divided by 100 means 0.35, and 100 divided by 100 means 1. So it will give me a random number somewhere between this thing. Yes, if it is less than 0, it is -1. And if it is more than 0, then it will give me some random number of that. Let me retype that and retype here Now you can see more or equals to 1 to 0. Should be more equal to 0. Okay, now you can see that instead of winning the same amount, I am randomly winning less than 1. Randomly. Sometimes more, sometimes less. Let's calculate the average risk to reward. What is the average risk to reward? This equals average. Average of what? Of this and the criteria more than 0. We don't need to calculate the losses, they are always -1. But when we have a winner, what is the average winner? We found a typo. No, this should be this way. More than 0. Average if. So you can see the average winner is 0.67. So on average you generate 0.67 and you lose 1. In out of 100 trades you have 60 winners that generate 67 on average, and you have 40 losers that lose 1. And that's not all, guys. I will reveal you a secret. When you have 60 trades, 60 winners, when you have 60 winners, I'll do it this way, the drawing thing. When you have 60 winners, 54 winners reverse here, yes, and go here, and only 6 reverse here, yes. So the amount of winner reversals reverse here more often than here. How can we deal with that situation? How can we code it in Excel? Pretty simple. Pretty simple. Let's go to Excel spreadsheet. And once again, imagine this situation. Imagine this situation that we are drawing here. Let's imagine this is the total amount of trades, 100. Yes. 60 trades, 54 winners, 6 winners as well, and 40 losers. Okay, let's do it this way. So if price is less than 54, it is a winner. Let's do it this way. Yes, if it is less than 54, from 1 to 54, it is a winner. Okay, but we need another 6 winners. Yes, another 6 winners. So if it is more than 94 plus 6 equals 100, so it is always a plus. Yes, and what is left in between is a minus. Agree, this distribution is pretty good, and the random generator will reflect that pretty obvious. So if it is less than 54, it is a winner. With the risk to reward, we will calculate which. And if it is more than 54, we will calculate a bit different risk to reward. Okay, let's do it this way. What is that? The risk to reward, if it reverses here first, from 1 to x, yes, from 1 to 0.62. Let's type that. The minimum is 0.62, minimum winner, 0.62, and maximal winner is 1. Yes, here. In case the price reverses before x, maximal winner is 1. The minimal winner is 0.62. But if price goes deeper towards 113, yes, here the winner turns into something as that is known as 0.35. So the smallest winner is 0.35. 0.35. So what it gives to me? What it gives to me? Let's do the random distribution. Okay, we are to divide those random things. If it is less or equals 54, this time it should be a winner that generates what? It should generate random something between which numbers? Between 0.62, roughly 62, and 100. So in the majority of cases it will generate something from this diapason, from this range. 62 versus 100 divided by 100 equals float number. Yes, in the majority of cases it will generate this. If it is less than 54. Okay, next, if it is not less than 54, we have two situations. Let's split those situations. If it is more or equals to 94, if it is more or equals what at the cell, oh, come on, if this cell, this one, if A2, the same cell, more or equals 94, then it should be random between 35 to 62, yes, 61, because 62, we have 62 here. So if it is less than 44, we have the winners within this range, and if it is more than 94, we have those 6 trades being smaller winners. Yes, yes, if it is this. And if it is neither this nor that, then it is -1. You can't do anything about that. Now it is done. So once again, guys, randomly choosing the range between this, 54 times we are winning something from this range. Then another 6 times, more than 94. 100 is our top. We are generating something from this range, and the rest we are losing. Equals this. You see, it is somewhere in the middle. That's why it is minus this. And this is the true risk to reward, because we are more often reverse before X. So this is the true risk to reward. Okay, pretty obvious with that. Yes? Yes. Should I build a graph? Of course, why not? Let us start from how much money you want to risk? $1,000? Yes. Starting from $1,000, and every time we should do it this way. What will be our bet? $10 per trade. So it equals, what is this? Multiplied by 10 and plus our previous result. So we should add to previous in order either to grow or decline, and so on and so forth. Double click on that, and come on, Shift downside, look at the number we have generated. Perfect. Insert the graph. Is the advanced pattern trading profitable? Yes. Look at this evidence. It is profitable. 60% of time winning 0.77 is profitable. If we recalculate that, we will see almost the same simulations, almost the same situation. Although the trades, winners and losses are distributed randomly, sometimes we'll have more losses, sometimes we'll have more winners, but in a large amount we typically have similar results. So if you had this chart in your backtesting, this doesn't mean that you will have the same chart in your real-time trading. What you will have in your real-time trading will look this way, you see, or maybe this way. So it is your chart from real-time trading. Good. So I just have done 1,000 of 1 million trades, maybe. Not yet a million, of course. I am to press it how many times? 1,000 times. Okay, I've done 100,000 times, 10,000 each. Now let's calculate what the risk to reward for what I want you guys to examine. This is the best risk to reward if you trade towards X. Yes, 1.6. Okay, let's type our best risk to reward. It is 1.6. 1.6. And this at X, exactly at X, we hit the stop loss, but if price doesn't hit that and reverses, we have our worst risk to reward. And our worst risk to reward is 1 to 1. So we can type 1. Do we have some other range? No, we don't. We don't have other range, because if price exceeds X, we are out. We are out. Let's copy these formulas and we will just substitute that. Copy and let's paste them here. Look at this formula. If it is less than 54, then it should be random between what and what? It should be random between 1 and 160. Yes? Yes. And if it is more than 94, what it should be? It should not be that random. It should be -1. Because if it is more than X, it should be -1 as well. So it means -1, and if it is more, and the rest is -1 as well. So we're losing. We only win if it is before X, reversing before X. But if it is reversing past X, more than 94 means that 6 trades reversing past X, we don't have them. We just close the position, it is 0. Pretty simple. -1. Okay, so let me recalculate them. You can see the average risk to reward is 1.29. 1.29. Let's build up a graph towards here and towards here and back again. Insert chart. This is the chart for trading. Now compare that. In first case scenario, out of 10,000 trades risking the same bet, we generated 9,000. And in second situation, we generated 25,000. Is this better? Yes, of course. Your accuracy is less. Instead of winning 60%, you only win 54%. Yes? Instead of winning, let's make it even worse. Instead of winning 54%, let us win, let's say 53% only. 53%, and the rest will be -1, -1. So no matter what, it is -1. Be it more than 94, be it less than 94, it will be -1. So if we win 53%, it will also be good. You see, it generates 2,000. What if we win only 50%? Only 50. What if we win only 50%? Let me replace the formula. We generate 18. Even if we win 50%, what if we win, let's say 47%? let's say 47%. We generate roughly the same. You see that? Winning 60% of the time equals if you win 47%. But of course you don't win that small amount. You win 43, oh sorry, you win 53, 54. %. Okay, let's draw some conclusions. You can see 10,000 trades, another 10,000, another 10,000, and more and more and more. You see the drawdowns are less. They recovered faster. You see those drawdowns here. You can have them larger. So what is this? 395 towards 395, right? Difficult to calculate, it is very small. What is the conclusion? There is no need to risk more. No need to place your stop loss at 113. It is pretty profitable, twice profitable, I'd say twice profitable, if you place your risk at exactly X. And here's the old saying that says, cut your losses short. So having larger stop loss, you have more winners. Of course, your accuracy is good, your accuracy is better, but in the long run, you generate less, twice less, because your stop loss is twice more, almost twice more. So these are my observations. First of all, the level of 80.9, it is the first thing that I found. It works dramatically good. It works extremely good. If we go to, let's say, euro dollar, and we enable that, let's say -1, yes, it was -1. Historical testing, yes, on history, we see the patterns are redrawn. So you will see one of them was loser, but this cipher worked at 80.9, slightly exceeding 80.9. Here it worked as well from this level. Here working from this level. Even butterflies are working from that level. The butterflies has a bit different level. It is 14.4, 1.144. It is a bit different. So this bat working from this level, spiking and working. This cipher working from that level as well. This Gartley, look at this, going here, and this red candle towards the downside. At least the break-even trade, it came very close to B-point retest. At B-point retest, we either take the first target or break even the trade. This butterfly working very well. This bat spiked through the stop loss. Gartley small cipher spiked through the stop loss. This larger cipher won, yes. Butterfly lost, and this bat lost. This butterfly won, came close to stop loss, but it won, and that's it. It even works on 15 minutes. Okay, it lost here. What was the previous? Didn't hit this. Okay, this butterfly was a loser as well. Look at this bat. It worked here with this bat pattern. This Gartley nothing. Cipher and bat worked perfectly. Then didn't complete. Was a loser here, but was a winner here. You see, guys, they are actually, if you have 54% accuracy, this means you almost have the same number of losers and winners. 54% accuracy, they are almost equal. 54 versus 46. So it doesn't mean that you always win, always win, always win. It doesn't mean that. What I'm showing you, what I'm trying to show is the precision of this level. The level is very precise. The price reverses exactly at this level. 1 or 2 pips exceeding that, and it reverses at that level that I have discovered with my software. So, and now imagine what other secrets you can reveal yourself. Think of it for a moment. If you are a scientist that is passionate about trading, that wants to reveal all the secrets from trading, and of course the more experienced you become, the more profit you generate. This is a matter of skills. If you are that kind of person, imagine what secrets you can reveal with this software. It is enormous. It is outstanding. Okay, think of it. Until then, thank you for watching this video. Don't forget to hit that like button. I suppose that the video was useful. I tried to explain my thoughts, my discoveries. Until then, good luck and good trading. Hope to see you soon.